Welcome back everybody to the next video. So in this one we're going to be talking about different candle patterns. Now we've obviously spoken already about bullish and bearish candlestick patterns, but now we're going to be talking more about structural patterns, okay, similar to our video on channels, and we're going to be talking about the different variations, okay, that price can display itself in, as well as obviously the traditional 3-touch ascending channels and the 3-touch descending channels. Now on the chart, okay, you can see that I've got a number of different structural patterns. Okay, now these ones first of all are what we know as reversal candlestick patterns. So obviously there's going to be two types. There's going to be reversal candlestick patterns, and there's going to be continuation candlestick patterns. So first of all we're going to focus on the reversal ones, and then we're going to have a little look at the continuation patterns. So first of all on the screen, okay, on the top left you can see we've got the double top. Now the double top, okay, is a great indication that price may be reversing. Now this is obviously a bearish signal because of course you need to be in an ascending channel or some kind of bullish upwards moving price action, okay, for a double top to actually be effective and give us an indication that price may be moving to the downside. So the double top, okay, can be seen in multiple different ways, like obviously that we already know about in our candlestick patterns, similar to a tweezer top. Okay, you can sometimes get, two wicks that are kind of symmetrical, and there'll be a really good indication that price may be reversing from that area. If you don't have back-to-back candles, then what you might see is more of a structural pattern like the double top pattern, okay, where you'll see price actually move away from a particular price level, okay, indicating that price may be quite expensive at this level. And then you'll eventually see price return to that same area. It may go slightly above, but you'll tend to see it then wick away, and you'll then be left with a double top. Now after you get a double top, now this may be at an area of resistance, for example, or it could be at an area of liquidity. Okay, you may get some kind of ascending channel into this double top, and then you'll then see a move away. So after you get this formation, it's very important to then be looking at how you actually want to get involved in the trade. Do you want to wait for some kind of impulsive leg first, or are you more happy to actually just look for your candlestick patterns, okay, at the completion of the double top? So obviously the inverse of the double top is the double bottom. So this is exactly the same but the other way around. So with a double bottom, of course, you need to be looking for that descending price action, some kind of bearish trend, okay, and then you'll then see that rejection, okay, of the same price level before a move higher. Now, the double top and the double bottom, okay, are quite good indications of some kind of support or some kind of resistance. Okay, as we already know, with some kind of support, for example, we know that an area of price is seen as more cheap, okay, and there's more of a demand for prices to then move higher. This then causes price to push away. As price then drops back down, it will then retest that same level, okay, and this is what will create that double bottom, okay, or obviously a double top for the reverse of that situation. So with the double bottom, okay, you want to make sure that you get that complete rejection twice, and of course you can either look to get involved at that extreme level at the bottom, okay, or you can wait for price to actually start to impulse away, and then you can look to maybe even get involved in the first correction, okay, or wait for price to impulse away and then start that consolidation, maybe even look for some kind of support level, or maybe even some kind of break and retest, which of course we're going to learn a little bit later on. So after the double top and the double bottom, what have we got next? So here we have the ascending wedge. So the ascending wedge, okay, is quite similar to the 3-touch ascending channel, but the slight difference is that you're going to start to see price actually squeezing tighter and tighter and tighter, okay, as it reaches higher price levels. So what this is indicating, okay, is that price starts, okay, by being quite volatile, okay, there's a lot more momentum in the market. You can see that price starts quite impulsively, okay, and then it pulls back, it then impulses again, and eventually what it's showing us is that there's a reduced amount of momentum, okay, in the market over a period of time. So as time goes on, okay, the momentum that was once there to the upside, okay, it's becoming less and less and less, and there's more and more indecision, okay, and consolidation coming into the market as price starts to squeeze before it will eventually then break out to the downside. So an ascending wedge, okay, is kind of like a variation of our 3-touch ascending channel. Now, like I said, sometimes you're going to get those 3 touches and you're going to get a nice parallel lines, okay, and it's going to give you those beautiful 1, 2, 3 touches, and then you're going to see a move away. But sometimes you need to be able to work with price, okay, and just kind of watch what it's doing at the time, okay, and the sort of patterns that are actually presenting themselves both structurally and with candlesticks to actually make sure you get involved and you don't actually miss the move. So obviously one thing that could happen is that price could actually create, you know, the first touch, the second touch, and then we may actually end up with some kind of double top pattern happening as price starts to squeeze. And it's really important, you know, to update those trend lines and make sure that you're identifying that, oh, okay, this is now an ascending wedge. You can see that price is starting to squeeze here. And then you want to ask yourself, well, now, do I want to wait for the first impulse and then get involved, just to be, you know, on the safe side to make sure that we are actually moving down from here? You know, or you can just get involved straight away. You know, you can wait for price to become so consolidated that you then see, you know, a certain candlestick pattern that you're happy with, or maybe you just want to, you know, get involved straight away with some kind of risk entry. Either way, you want to be on the ball to identify the ascending wedge and understand that that squeeze and that reduction in momentum, okay, is likely to cause the following impulse in the opposite direction. So of course, if we go to the bottom right now, okay, just seeing as we're focusing on the ascending wedge, now the descending wedge, okay, is the complete opposite, but, you know, obviously you need to be in some kind of downwards moving price action. So exactly the same as the ascending wedge, okay, you're going to see, first of all, you're going to see nice impulsive legs, okay, pushing down and then, you know, creating these kind of corrections and these pullbacks. But then what you're going to see is a reduction in that momentum, okay? You're going to start seeing reduced momentum in the markets. Price is going to start, you know, pushing down and then immediately retracing, okay, creating more sort of choppy descending price action, okay? And what that's going to do, if you sort of draw in your trend lines, okay, and identify your major points, you're going to start to see that descending wedge happen, and you're going to start to maybe notice even other candlestick patterns, or maybe even the double bottom, before we then see a nice impulse to the upside. Of course, you know, you could start by seeing a descending wedge, okay, and then that may turn into some sort of larger descending 3-touch channel. But of course, if we are seeing what we need to see at the time, okay, and you have enough confluence and confirmation that you're happy to get involved in the markets, then that is absolutely fine to do so. So the final reversal pattern that we're going to be looking into, okay, is the head and shoulders. So the head and shoulders pattern, okay, is quite a well-known pattern, okay, you may have heard of it before, both the head and shoulders and the inverse head and shoulders. And what it does, okay, is it's kind of related to our support and resistance and the way in which we get the breaks and the retests. Now what you'll find is that with these heads and these shoulders, okay, that sort of indicates at one point some kind of line of support, and then what will happen is price will then break that line of support, and then what it will do is it will return to that similar level, okay, and it will test what we like to call the neckline. Okay, now the neckline is the trend line running along the bottom of the head and shoulders, okay, and what price will tend to do is return to this level after breaking lower, and then you may see a move to the downside. It's kind of like some sort of form of break and retest, okay, but this is just quite a common way of seeing it in the market, and you'll see it as this kind of head and shoulders pattern. So what first of all you'll see is that first shoulder, which may look like price has found a level that they find cheap and that you may see you know, buyers coming into the market. You'll then see price return to that level, and at this point, okay, it's very important to maybe either wait for your candlestick patterns or just wait and see, you know, the type of, you know, reaction we get to this area, because you don't want to get you know, tricked into thinking it's some kind of double bottom, when in fact, you know, we're actually going to be creating a head and shoulders. This is why it's really important to understand this pattern and understand the differences, okay, about a pattern such as the head and shoulders and the double bottom, okay, and the type of way that price is going to be delivered to be able to work out the difference between the two. So obviously once we then see price, you know, start to move away from that area of support, we will then see a complete fail and price will impulse to the downside, okay, and it will break through that neckline. So once price breaks through that neckline, okay, like I said, you're then going to see that price probably return to that area. So it's up to you whether you want to get involved straight away on the breakout of the neckline, or whether you want to be, you know, someone who's a little bit more patient and wait to see if we get a little bit more confirmation, okay, a little bit more confluence to your trade idea that price is actually breaking down bearish, okay, and that is going to stay bearish. So obviously now the opposite of the head and shoulders, we've got the inverse head and shoulders. Now the inverse head and shoulders is exactly the same thing, but now we're dealing with areas of resistance. So like I said, first of all, you may end up with some kind of double top formation setting up, okay, but it's very important to be able to understand how price is actually being delivered with these different structural patterns. So once you see the first shoulder, okay, and then the head of the inverse head and shoulders, you may have some kind of resistance drawn in, okay, you may feel as though price is rejecting from some kind of double top, but sometimes it's important to just wait it out and see what happens next, especially if you have that head shape in the middle, okay, it's not your traditional double top formation, and you just want to make sure, draw that neckline in and see if price can actually then break further down, okay, and it will confirm that you have some kind of double top and the resistance is holding, or you're going to see what we've got here in the inverse head and shoulders, where price then goes on to break that neckline, okay, with a nice strong bullish impulse to the upside, and then like I said, you may get some kind of retrace back to that neckline or thereabouts, okay, and that will then give us an indication that price will be moving to the upside, and that will then allow you to get involved. So obviously it's really important to better understand these different types of reversal patterns in the market, okay, they always set up in slightly different situations, and like I said, they're all very helpful and useful tools that we can have, okay, to actually give us extra confluence when building a particular trade idea. Now it's great to have obviously support and resistance and 3-touch channels, and just obviously ascending and descending channels in general, but having these extra additional candlestick structures are also really good to have, okay, and to keep an eye on, because like I said, sometimes price isn't always perfect and things aren't always going to set up exactly to plan. So by having these different variations in your mind, you'll be able to actually act in the moment, okay, you'll be able to update your analysis, and you'll be able to realize that, oh, okay, this isn't a 3-touch channel, now it's an ascending wedge, or okay, maybe this isn't, a double top, maybe it's some kind of inverse head and shoulders. And by having that knowledge, you're going to be able to spot that in the time, okay, and it may make you hold off from, rushing into a trade, and you may look for a little bit more confirmation. And then by waiting, okay, and sitting on your hands, you'll then be able to get into a much more high quality trade once you actually understand what pattern is being presented to you and the actual true intentions of the market. So now let's have a little look at the continuation patterns, okay? There's a couple in there that are quite similar to the reversal patterns, but obviously again they're going to be in slightly different areas of the charts, so it's really good to get understanding of how these patterns can be presented. So let's get into that now.
The best time to take action is now. What are you waiting for? Tired of struggling with market direction? Want buy and sell indications at a click of a button? Who wouldn't? Check out TradeDork's buy and sell indicator today at TradeDork.com.
Okay, so here on the screen we have all the different types of continuation patterns. So as you can see, the double top and the double bottom are quite similar to what we just saw a minute ago, okay, but it's all about whereabouts we see these patterns actually presented on the charts. So for the double top continuation pattern, okay, this is actually going to be a pattern that we see not at an end of an ascending channel or some kind of bullish move, but it's actually going to be what we see after an impulse to the downside. So after you see this impulsive move to the downside, okay, you're going to tend to get some kind of consolidation or correction, as we already know. So this correction can actually be in a number of different ways, okay, and one of the ways that it can be displayed is in this double top formation. So what you'll see, okay, is some kind of sideways either correction or flag, okay, and what you'll get is the double top, which we've just looked at in the previous section, okay, but you'll get it as part of this corrective move. So what this will do, okay, is it will look like some kind of resistance, okay, is being presented during the correction. So what it's showing us is that price initially, okay, pushed down and impulse to the downside, and now that we're actually in this corrective phase, okay, price again is finding areas of expensive price, and what it's doing is it's starting to reject these areas, okay, and it's creating that double top before we then see price sell off completely. So what you can do, okay, if you had a trend line, you could draw it across, okay, to create this double top and overall create that sort of flag shaped correction, and then you'll know that if price starts to reject this area, we're already in a bearish move, okay, we've had the impulse, we've had the correction, so now what we can actually do is actually predict that price is going to continue this momentum to the downside. So what we can then do is look for potentially some kind of candlestick pattern, okay, and get involved in short trades. So just like the double top continuation, okay, we also have the double bottom continuation. So the double bottom continuation is exactly the same, but just the other way around. So what we need to see first of all, okay, is some kind of impulsive move to the upside. Now once you get that impulsive move to the upside, okay, obviously after an impulse we're going to get some kind of correction, but this time we're going to see a double bottom appear instead of a double top. Now by getting a double bottom, okay, a really clear double bottom, what it's going to show us, okay, is those areas of support. Now by seeing this, okay, it's telling us that price, okay, is no longer expensive, okay, price is still quite cheap and people are finding the demand to actually push prices even higher. So by seeing the double bottom, okay, and by seeing the double top, what it's going to allow you to do, okay, is really, take an initiative in the market and realize that, okay, we've had the impulse, now we're actually holding these levels of support again, so maybe we're going to continue even higher, so that'll be an opportunity for you to actually get involved in the market, okay, and place a long position. Now the other two types of continuation patterns, okay, are both the expanding triangle and the symmetrical triangle. So the expanding triangle, okay, as you can see, I've joined those trend lines up and you can see that both the trend lines are moving away from each other. So by both of these trend lines moving away from each other, okay, what they'll do is they'll start at some kind of point, okay, and then they'll expand away to create that kind of expanding triangle shape. Now what this is doing, okay, is it's showing us that price initially pushed to the upside, okay, which is what you're going to want to see, some kind of bullish impulse. And then price started to be corrective, okay, but then the momentum, okay, and the volatility starts to increase as we create these points on our trend line. Now once this happens, okay, what you'll get is some kind of sweep of liquidity, or you may even see some kind of respect of a support level near the bottom of the correction, and then you'll begin to actually see a move away after usually what we get is the 1, 2, 3 touches. So this is just a different format, okay, of having a 3-touch structure, and this one is the expanding triangle. And after we get that 3-touch, okay, when you realize that price is actually beginning to expand, okay, and the volatility is actually increasing in the market, that will allow you to take the initiative, okay, and think to ourselves, okay, maybe we've got enough confluence now that we've actually had our impulse and correction, we've had our 3 touches, now maybe price wants to continue moving in the upwards direction, so now I'm going to get involved in buy trades. So similar to the expanding triangle, okay, the symmetrical triangle is slightly different, but this one is showing more of a squeeze in price, okay, before eventually pushing out to the upside. So again, you want to obviously see this in some kind of bullish leg. Of course, this is going to work in both bearish and bullish impulsive and corrective legs, okay, but these variations are just for bullish price action, okay, both of these triangles. So this symmetrical triangle is for a impulse to the upside. You then see that we have that quite sharp retrace initially, okay, and then you can see that the volatility in the market but slowly begins to decrease, okay, and you can see that, price is starting to consolidate, okay, it doesn't know what it wants to do. What it's doing is it's generating that liquidity. It's trying to work out, okay, are we at a cheap enough level that we're going to get more buyers entering the market? And then what will happen is eventually it will find some kind of level of support, okay, it may even sweep some kind of liquidity, and then what will happen is price will slowly condense and then eventually pop out to the top, okay, and you'll get another impulsive move. So by being able to actually identify both of these triangles, okay, during some kind of impulsive and corrective phase, what you'll be able to do, okay, is be able to actually see this happening during the time, okay, and you'll be able to understand these kind of corrective moves a little better, rather than thinking to myself, okay, well, I know we're in a corrective phase, but I don't know what I'm looking for, or I don't know how long this is going to last for. If you're able to spot one of these potential patterns, as well as a kind of candlestick pattern which might go with it, okay, maybe at a 3rd touch or when you see price condensing, then what you'll be able to do is say, okay, now I think the correction's finished, I'm seeing all of these things that I want to see before I look for a buy trade, so now I can get involved in the market, okay, and that is when you're actually going to be able to capitalize, okay, and actually be able to read the markets correctly. So what we're going to do now, okay, now we have an understanding of both our reversal patterns and also our continuation patterns. What I'm going to do is I'm going to take this to the live charts, okay, and show you guys through some price action to give you an understanding of where these kind of patterns are shown on the charts, okay, and how they've actually played out in real time. So let's have a little look at that now. Okay guys, so now on the chart, what I'm going to do is I'm just going to talk through some different patterns, okay, that I've drawn out on the charts. And we're going to discuss whereabouts they are on the charts, okay, and the type of phases that we're actually in when these actual patterns are present. So the first thing that we want to talk about, okay, is what is actually going on in the markets in this area here. Now, what I've drawn in, okay, is I've drawn in this nice double top, okay, which is part of this sort of larger corrective phase. Now, why is this part of the larger corrective phase? Well, we've had this nice strong momentum down, okay, in here, and then what we've done, okay, is we've started to consolidate sideways. Now, as well as that, I've understood that, okay, first of all, we were in this bearish leg in here, and now because we've started to pull back, okay, and we failed to initially break the low and continue that momentum to the downside, okay, instead what we've done, okay, is we've actually reacted to these areas of support and we've just pushed off, okay, and that is then when we created this double top in here. So now, being able to recognize, okay, that maybe this is a double top continuation, what we can do, okay, is mark in this as a double top followed from this move down in here, double top, okay, creating this larger structure. And now what might happen, okay, is price may actually consolidate around in here and then may actually move to the downside. So if we move slightly further back in time, okay, what else can we see? Well, again, what did we have? We had this larger impulsive leg to the downside, followed by some kind of corrective pullback in here. Now, this corrective pullback, okay, what kind of continuation structure, okay, are we actually seeing? Well, as you can see, okay, it's not quite an expanding triangle, it's not quite a symmetrical triangle, okay, but what it is what I would refer to, okay, is just some kind of three-touch ascending channel. Now, you may be wondering where's the third touch. Well, you could technically join this high point in here, okay, and then followed by this point and this point to create those three touches before the next move down, okay? Sometimes all you need to see, okay, is some kind of ascending nature or descending nature, and that's perfectly fine, okay, especially after an impulse to the downside. And that's why it's really important to know whereabouts are you seeing these, you know, ascending channels and descending channels, and what kind of phase of the market are we actually in. So again, as you can see, we then get this nice high test candle in here, okay, at the third touch before this move to the downside. So if we keep looking back in price now, okay, what else can we see? Well, again, okay, this is a good area to look for a potential double top, and whereabouts are we actually seeing this double top? Well, in this situation, it's after an impulse from the upside. So if we're seeing a double top following an impulse from the upside, okay, this could now be indicating to us a potential area of reversal. Why is it not an area of potential continuation? Well, for it to be an area of a continuation, it would have to come from some kind of impulsive leg down, but because we're coming from an impulsive leg up, okay, into an area, okay, of a double top, it's telling me that price is actually rejecting this area. Why is price rejecting this area? Well, potentially price is too expensive here, okay, and then what we do is actually create some areas of resistance in these areas just in here, okay, and you can see that price constantly is tapping into this area, and then eventually we reject. So by being able to identify, okay, well, what I can see here is some kind of double top, there's lots of sort of wicking going on, it can indicate to us that price may be ready to reverse now, and that is when we can actually get involved in short trades. So if we keep working backwards, okay, what else can we actually see? So what we've got here, okay, is a nice impulsive leg to the upside. So again, now we're actually creating that correction. Well, this correction here, okay, we've got a sloping downline on the top and we've got a sloping downline on the bottom. So this would actually be seen as some kind of descending channel. Okay, are there three touches? Well, we do have multiple touches, okay, on this bottom line here. Okay, sort of 3 to 4 different touches, and then we break higher. So again, more indication, as well as the tweezer bottoms that you can see in here with these two wicks. Okay, more indication that price may now be moving to the upside, and that we've actually ended up finishing that corrective phase. Okay, so if we zoom out a little bit more, what else can we actually see? So, okay, again, in here we've got a much larger descending channel in here. So sometimes you can actually break up the structures individually, but sometimes it's good to just look overall at what kind of phase of the market we're in. So ever since we actually pushed down from this area in here, okay, I can see the price became very, very choppy in here, okay, and it was very, very consolidating, lots of wicks, small body candles, and we were slowly starting to descend in here, okay. After a while, we started to create some actual structure points, okay, in these areas in here, and it was able to show me that price is actually moving in this descending channel, and potentially if we were to update our line, what we could see is 1, 2, 3 touches in here, okay, and then we then get a nice engulfing bullish candle, which is predicting to us that price may then be moving to the upside. So sometimes it's good, guys, just to be able to zoom out a little bit, you know, join up a few different structures together and really get an understanding of everything that we've learned so far, okay, and putting it all together. I'm mainly looking at, you know, these phases of impulse, correction, impulse, and then I'm tying that in with how the actual candles are represented on the charts, okay, either in, you know, engulfing bullish or bearish candles, or are they small sort of doji and corrective candles. So again, at the top of this run up in here, what do we have? You can see we get this clear double top formation in here, okay? Price rejects once, we then curve away, we come back up, we retest, and then you can see that price sells off. So after we get this kind of bullish move to the upside in here, we then get that clear rejection, okay? The resistance then starts to hold. This area of price is clearly too expensive, and then what it does, the demand actually drops out, okay? And then price tends to sell off, exactly what it's done here. So what else can we actually see? Obviously there's lots of other things happening at the same time. So as we move down, okay, in here what we've got is a nice impulsive move to the upside, okay, and then what we've got here is a nice symmetrical triangle. So in this situation you can see how price started, okay, quite volatile, okay, lots of momentum in here, and then the momentum slowly started to drop out. Okay, price got smaller and smaller, okay, and what it did is it started to close in these triangle points in here, okay, creating some kind of wedge in price, and then what it does is you're expecting some kind of breakout, okay, for further moves to the upside. So that's the symmetrical triangle just in there. Now if you move down here, what you can see is what we've actually got is an inverse head and shoulders. So if you ever see, you know, the market push down and then sharply retrace, sometimes you need to be able to identify that as the actual head of the head and shoulders. So in this situation here, I've been able to identify that this can be seen as shoulder 1, this can be seen as the head, and then this can be seen as shoulder 2. Okay, that would give me some kind of trend line, probably working along this area here. Okay, so once price starts to break up, okay, you can then, you know, confirm trades using different candlestick formations, etc. Okay, or you could even look to get involved, okay, in the second shoulder, for example. I mean, here you can see we have a nice retrace candle in here where price pushes down and then immediately retraces back up. Okay, so that could be a good area to get involved in potential trades, okay, if you tied that in with some areas of support to give you those ideas of prices moving higher. So that's our inverse head and shoulders just in there. If we keep moving backwards, okay, what else can we see? So in here again, if we zoom out, we've got this nice impulsive leg in here, okay, moving to the upside. We then again have another symmetrical triangle. You can see how these highs are moving lower and lower and lower, okay, and these lows are beginning to move higher, which what it does is it begins to squeeze price, okay, before eventually breaking to the upside after we get this nice low test candle, okay, just in here. Now, as well as it being a low test candle in here, what else can you see? Okay, it's also a morning star because we have that down candle in here, followed by, you know, the low test doji candle in here, and then we get the nice bullish engulfing candle just in here. So when we start to see, okay, well now we've got our second point of our symmetrical triangle, and we've also got a nice candlestick formation in here, this would be a good area to look to get involved in the market, okay, to be able to trade long and continue that sort of impulsive move to the upside. So if we keep looking back now, what else can we see? So this area here is quite interesting. You can see how we are heavily bearish, okay, pushing down. What we've got is we've got this nice kind of impulsive leg in here, okay, moving to the downside. And then what you can see is we start this expanding triangle this time. So why is it an expanding triangle? Well, the highs, okay, are slowly moving higher, okay, every time it puts in a new one. It moves higher, and the lows are all moving lower. So what that does, okay, is it creates this illusion of price expanding like this. And then what you can expect, okay, is either at the third touch or even, okay, slightly further up, like this area in here, for price to then actually react and break down. Now what's interesting about this example, okay, is that there's actually a pattern within a pattern, because here what you can see is that we've got this tight consolidation in price, okay, where you can see these lots of sideways candles back to back, okay, and on a lower time frame, what this would be seen as, okay, is some kind of ascending channel. Okay, so what we've actually got here is we've got an ascending channel in price right at the top of our expanding triangle. So this is even more confluence that we actually have now, okay, that price may be looking to potentially move lower. As well as that, we've got, you know, shorter term areas of resistance, such as areas in here, okay, so tying everything in together, as well as the fact that we've now had impulse, correction, impulse, we know this is a great place to look to get involved in trades, and you could either just sell one, okay, straight away in here, or wait for price to break out and then look to get involved in the first pullback. So after this happens, okay, what else can we actually see? Again, we've got some kind of ascending channel just in here. It's not quite a symmetrical triangle, even though these low points are higher. Okay, I mean, if you used this low point in here, okay, you could then say, well, now we've got a symmetrical triangle, but because price then broke out higher, it created more of this kind of ascending, flatter correction in here. Okay, still a great indication that price is going to be moving to the downside. You could even say it's some kind of double top in here, the way how price just rejects this area with this wick, and then again, price returns and rejects that area with that wick again. So if we have a little look back again even further, what else can we see? So over here we've got a nice descending channel. Okay, it's not quite a descending wedge, but I would say that is a great 3-touch descending channel at the end of this impulsive move in here. Okay, you see we've got 0.1, 0.2 and 0.3. So okay, just by connecting those up, we know that price is highly likely to reverse after this 3rd touch in here. So again, you can look to trade either in this area or after we break out, okay, the retest into areas such as this, and then look to get long. So looking back again, we've got a few more different shapes in here. So if we zoom out, you get a better understanding of what we're actually, you know, seeing here. So first of all, here what you can see is we've got some kind of expanding again. We've got this push down in this area in here. Okay, and it's then followed by this larger kind of expanding correction. It's sort of a double top as well. Okay, but the high point is slightly higher, so you do have that kind of expanding element to it. So again, once you see price start to move away, that's when you can look to actually get involved, okay, on whatever time frame you're actually trading. Now, when you get, you know, this impulse and this expanding, before that, we actually had this clear sort of ascending wedge formation, which was telling us that price is starting to squeeze and that it's highly likely that it's going to be moving to the downside. As you can see here, okay, if we start to look at our actual candlesticks, what we can see is that price, okay, in this area specifically, okay, is very, very corrective, lots of up and down candles, okay, moving up and down, up and down, up and down. Price is starting to squeeze, okay, we're getting this steep trend line in here, and then what happens is price eventually drops out, okay, and we start to see those bearish engulfing candles moving to the downside. So that's the great thing about seeing these sort of ascending wedges, okay, is sometimes you can then actually read that sort of consolidating, you know, corrective price action within that kind of structure, and it will give you a great indication of which way price is likely to be moving. So again, in here, we've gone from an ascending wedge up here to a descending wedge down here. Now you could say that this is also a 3-touch pattern. We've got 1, 2 and 3 touches just in here. However, I'd say it's more of a descending wedge because of the way that the top 2 points in here and in here, okay, or even in here, okay, are actually moving inwards. So it's creating again that kind of squeezing nature just in this area in here. So it's another indication, okay, if you had a level of support, for example, and then some kind of candlestick confirmation, it would be a great area to look to get involved in potential long trades. So if we keep looking back up now, finally you can see we've got one more example in here, okay, and it is the classic head and shoulders. So you can see in here, if you look carefully, you've got the head and shoulders pattern just in here. Again, it's always in areas where price tends to impulse to the upside, okay, and then snap back, and you get that sharp reversal, obviously in either direction, but in this example, it's a clear push up to the upside, and then it's a nice impulsive retrace all the way back down. Now, if you see that, okay, you want to identify, well, is this the head of the head and shoulders? And if it is, you need to ask yourself, well, where's the first shoulder then? Okay, well, if this is the first shoulder, just based on the fact that this was the last arch in price, this then becomes the head, okay, and then this arching price becomes that final shoulder. So then if you draw a line across the bottom, okay, what do we get? We get the neckline, and then that's obviously where we get the breakout. So either if you sell it on the breakout of that line just in there, okay, or being able to predict it and be able to get in slightly early in here, for example, on the second shoulder, where again you're seeing these nice tweezer top candles just in here, okay, lots of high tests, and it's showing that price is looking to reject that area. So just by these few examples, okay, that I've gone through on the chart, you can see how you can easily get an understanding of what the market is likely to do, okay, just by following these few simple patterns. Okay, we now have an understanding of what kind of phases the market's in by being able to look at the candlesticks and say, well, are we impulsive or are we corrective? And we know if we're in an impulse, we've then got a correction to follow, and then following the correction, we're going to have another impulse. So being able to identify what phase we're in, okay, will allow us to actually identify these particular patterns, okay, whether they are reversal patterns or whether they are continuation patterns, okay, and that will then give us a great tool to use along with our support and our resistance, okay, and everything else that we're beginning to learn to create some kind of plan, okay, to actually execute and get involved in positions in the market. So I hope you guys all took something away from this video, okay, and I will catch you all in the next episode, so stay tuned because you don't want to miss it.
Be a dork.